A very good morning, traders. Welcome to this FXDD video on the euro dollar. My name is Chris. But before we take a look at the charts though, be aware of this risk disclaimer explaining the fact that trading for exchange and global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. And also, please be aware of these two links where you can join the live trading webinars at the top or the live educational webinars at the bottom here, link from Nennet and myself, or of course, subscribe to the FXDD YouTube channel where you can see all of the recordings, videos, analysis, and live trading and live educational webinars as well. All right, so this is the euro dollar, and there was indeed that strong downside on the NFP, although not as strong maybe as some expected, because 70 pips bearishness on a strong NFP number is not that much either, and price is still respecting this Fibonacci level. Excuse me, I have to adjust it just a tad here, this Fibonacci level there, and as you can see, price hitting the 88.6 fib and respecting that. So this makes me wonder whether the euro dollar is really bearish despite the bearish price action, certainly in the downtrend, even visible now on this 4-hour chart. In my view, the ABC pattern that I had in mind could still be valid, and price is not invalidated as yet. 5 waves up here could be wave A, and this retracement could be wave B. Now, so far price is bouncing, but what I'm looking for is at least 5 to 6 candles that could not break this low. That hasn't happened yet. This is candle number 4, for the fourth 4-hour candle to be precise, that hasn't broken below the bounce at the 88.6 fib. So maybe later today, at the end of today, for instance, if price is showing strong momentum and then maybe a hook back like that, which cannot break below this bottom, I think there's a first indication, a first warning sign that maybe this bearish swing is over. Now, I say very cautiously a first warning sign because obviously the trend is certainly down and price is clearly below the 21 EMA. And if price goes sideways like this, and then starts to break, well then indeed probably my bullish reversal idea expectation is out of the window. But the real invalidation of that idea is when price breaks below this bottom here, the support zone at 111.80. I need to see a break below that, and then in that case a downtrend is confirmed and most likely to continue down to 111, and then the next round level at 110. What I'll be waiting for, let's get rid of this fib for the moment, is a clear daily candle that could break below this 111 like this, close below it preferably, but at least it has a low below that 111 like that. In that case, retracement and continuation, in my view, is becoming likely down to 111, and then if it breaks through that, then down to 110. All right. Otherwise, if price breaks above Friday's NFP high at around 112.88, if I remember correctly, indeed, then of course something else might be going on, because price, although it broke a little bit below the support line, generally speaking, it's pretty close to that support line, and there was not a massive break either. So this uptrend channel could still be valid, and if price breaks above 112.88, there could be a bullish breakout and continuation up to 114.50, maybe even 115 as the main target. On the 4-hour chart, that require for price to break above the 21 EMA zone. What I'm waiting for is either the break or a pullback and continuation. All right, for instance, a break above the 21 EMA, a pullback down to the weekly pivot point, and then a continuation move up could happen as price then breaks through resistance. So from my perspective, this is what I'm waiting for a bullish reversal, is really the break below, above, of course, the 144 EMA, the 21 EMA, and the daily high at 112.88. That is a key resistance zone. Price needs to break above that pullback and continuation, what I'm expecting for a reversal. Otherwise here, of course, that is risky territory. It could still just be a pullback within the downtrend. But for downside, I really need price with the daily candles to break below 111.80. Otherwise, I think this basically the spot between 111.80 and 112.88, I think is a risky zone. Not clear whether price will bounce and reverse or actually break and continue. So I'd rather wait for a clear decision from the market before moving either way, in my view, or thinking about trades either way. But until then, of course, I'm keeping an eye on it closely. It is an interesting spot. It is a very deep fib at this moment. So certainly interesting. On Friday, as you can see, price respected, or you don't see that at the moment, but price respected the 61.8 fib before Friday. Here you go. Let's put it on. This, no, wait, that's the wrong fib. This is the right fib that I was using. Sorry. There we go. As you can see, respecting the 61.8 is respecting the 23, the 38 as well, and the 88.6 fib. And on Friday, there was a triangle. The news event turned out to be bullish for the dollar, so we saw a break to the downside. So let's see how the next step shapes out. I'm keeping an eye on 111.80 and 112.88 as the main levels. All right, that's the update on the euro dollar from my perspective. Let's see, of course, how that turns out in the live trading webinars. We'll give an update, Nennet and myself. You can join live here with these particular links. Sorry, I just want to go back to the charts because I realized I forgot to mention two things in this video actually that I had planned. One thing was the bullish candle on the monthly chart. That is still dominating, I think, at the moment, after a falling wedge pattern, after 5 waves completed to the downside as well. 1, 2, 3, 4, 5, like this probably. So from that perspective, I'm expecting ABC up. And this monthly candle, after breaking through the falling wedge, could indicate the reversal. And on a weekly chart also, there have been 1, 2, 3, 4, 5, 6th candle that hasn't broken this low, and the double bottom at 111.80. So from that perspective, the double bottom I think is a clear, strong pattern at this moment, and 6 candles not breaking that. Although the 6th candle is bearish, so from my perspective, this weekly candle is still very important. If this week's weekly candle manages to push through the double bottom here at around 111, yeah, 111 indeed, 111-ish, then that could indicate still a downtrend. But if it fails, then, or if this weekly candle is bearish and very close to the weekly support, that could also be an indication that price might still continue with the downtrend. But if this is a doji or a bullish candle, then I think that this particular swing, this bearish swing, is completed, and it's likely to indicate that price is going to make a bullish swing, a bullish corrective swing, but it could have some impulse in it as well, like here, for instance. But I do think that in that case, this bearish swing is likely to be finished, and price is going to make a bigger bullish swing if this weekly candle is a doji or bullish. If this week's weekly candle is still bearish, then I would still wait for next week's candle. Of course, if it breaks below 111, 10-ish, then it's probably back in a downtrend. All right, just wanted to add that quickly. Otherwise, make sure to join the FXDD YouTube channel by subscribing, of course, and you'll get an update about all the videos that are added. And above all, wish you good trading. See you soon. Cheers.